Good morning, everyone. Welcome to Apple Markets. My name is Chris. This is a live webinar taking a look at the Forex market, and we can take a look at other instruments as well. First of all, though, before we start looking at the charts, be aware of these disclaimers. First of all, the fact that this webinar is shown to a global audience doesn't mean that it's suitable for everyone. Take a look at animalmarketsglobal.com, select your country of residence, and contact the appropriate entity to find out more information about that and other details. And the second of all, trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer, plus you're aware of the risk involved when trading. All right, thank you for your attention on that. And wanted to also ask you to take a look at the MetaTrader 4 Supreme Edition if you have the opportunity, a bit of time later today. There are a lot of extra features that it offers a trader to make your trading life a bit easier. So take a look at that, including Alarm Manager, a Money Manager window, Correlation Trader, Correlation Matrices. Well, there are 60 of them. I'm not going to mention all of them, but take a look and you can see which ones could help you with your trading. All right. Good morning, Bob. Thank you so much for letting me know. This is the MetaTrader 4 Supreme Edition. You can find it by going to trading platforms. The screens that I apparently was not showing because I did hit the play button there, but apparently didn't click on it sufficiently. The slides that you did not see are these, warning you that this webinar is not necessarily viewable for everyone. All right, take a look at Apple Markets Global. And the second slide that you didn't see was regarding the risk disclaimer. So this one is the one I was referring to when I was talking about it. All right. So I hope that everyone had a good weekend and maybe some good trading already on Monday. Yesterday was the last day of the month and the first day of the week, so it was a bit of an awkward day from that point of view. This is the first day of a new month, so we can take a look at monthly candles. We got a lot of loads of information I think we can review. Probably too much, to be honest, to take a look at all of it. But we'll take a look at the most important ones, obviously. News events this week, well, we have an NFP, non-farm payroll, on Friday. We had interest rates stayed at 2% on the Aussie. Today, otherwise, Germany has unemployment rate and change, and Euro 2. CAD has growth rate just like Italy, and the dollar has a manufacturing PMI. So there's quite a lot of red tagged events. There's also some lighter green and yellow ones. So keep an eye on that news calendar. You can find that as well by going to Analytics and Forex calendar, just like you can find the market heat map. And that shows the volatility, which pairs are moving a lot. Let's take a look. Oil apparently big mover yesterday, or that's today, sorry. Yesterday, also oil. All right, what do we have here? We got a lot of yens, right? Look at that cluster of yens below 1%. Some of them, the volatility a bit more, some of them less, but that was a big mover. We got New Zealand here on the upper side, odd and pound New Zealand, close to the 1%. And we got also some volatility pairs that didn't move too much, like for instance, pound odd and Euro New Zealand. Pound yen and Euro odd did move nearly 1%, so that's pretty good, and a lot of volatility as well. Pretty spread out. Normally the pairs are a bit more clustered. Odd USD, New Zealand USD, CAD Swiss were the slowest movers, as you can see. All right, so that gives us some information there. Let's take a look at the charts. Anyone particularly interested in any currency pair or any time frame? Do you see any trades that you find interesting at this point? Let me know. We can start with that if you want. For the moment, though, I'm going to kick off with the euro dollar as always, taking a look at the 4-hour chart now. And basically, euro dollar, what I consider approaching now the 78.6 fib. And this is the game basically where price is going from 1 fib, going to 1 fib, stopping at a fib, right? It went to the 23.6 fib, in fact, here. Price stopped there just a bit, then continued lower. Then stopped, excuse me, then stopped at the 38.2 fib, right? Went to the 38.2 fib, stopped there, then went lower, although that was a bit choppier. Didn't stop at the 50, but did stop at the 61.8. That sometimes happens. Maybe if we zoom in to a lower time frame here, like an hourly or 15, we would see a pause, but we don't see it on the 4-hour. 4-hour just went through it. And that sometimes happens, I would say, 2 out of 3 times price visibly stops at a fib, and there's always a 1 out of 3, let's say, that doesn't. So that 50 fib was kind of ignored on this time frame. And once again, on a lower time frame, we could see price stopping there. On a 50-minute chart, we might see a substantial bear flag being built there, but then still see a continuation. On this time frame, we don't see that. Then we see price stopping at the 61.8 fib, right? And giving a bounce. And I said it could be a bounce for bigger upside, but it could also easily be rejected with any of these fibs for a further downside to another fib. The next fib being the 78.6 fib. So far, roughly, I would say 3 out of 4, although the 23.6 is maybe not the best example, but 2 good examples, 1 minor and 1 ignored. So will the 78.6 fib get respected? Probably yes, I would say there's a good chance it will, but the question is how far will it bounce up? And if it doesn't, then the 888.6 fib seems a very likely candidate for getting a bounce. That's what I think that we can derive from looking at this fib and looking from this 4-hour chart. That we're pretty close to a bouncing spot, whether it's here or maybe a tad lower, and that could be a difference. It is 75 fibs lower. The 888.6 fib is 75 fibs lower than the 78.6 fib. But ultimately, I think that price will make a significant rally that goes further than the small bounces we've had at these fibs. Those are pretty small bounces, right? The 61.8 fib, for instance, gave a 110 pip bounce, which seems a lot, but on a 4-hour chart, it's a mere smitten. It's a small little bounce. And price wasn't able to break, when it bounced, it wasn't able to break above the moving averages, and in fact got rejected here. So there's one danger about using this fib at the moment, is that the moving averages are bearishly aligned. So from that point of view, the fib and the moving averages are not in confluence anymore with each other. So anyone who wants to trade with the trend, anyone who's looking to trade with the trend of 4-hour chart should be skipping this chart or only thinking about going short down to the 886 fib. That's the only thing on a with the trend trader's mind at the moment. But considering the 78.6 fib, considering this big support level, I'm not sure if that's such a great trade to try to trade it down to the 88.6 fib. Anyone who's a counter trend trader might consider these fibs to look for a bigger move up. So I really think it depends what type of trader you are, if this is interesting or not. I'm just showing what I see, and I guess how anyone wants to approach it. But oh wait, this seems like okay. There we go. Now, from a daily perspective, we should mention that this trend line has been broken. That's a support trend line, so let me make it green. There we go. No, that's not what sorry about that. Anyhow, you get the point. The trend line is supposed to be green, but so that trend line has been broken. That's my point, and price is now breaking through that. So there is a chance that perhaps this is a signal of a breakout to the downside. But from my point of view, even if it does move lower, there is a good chance of at least a pullback back to that broken trend line, back to maybe halfway this downside before we might continue lower and test this bottom. Nothing moves in one straight line, or typically it doesn't. So you'll see some waves, some ups and downs. So even if this is a breakout, I think we'll see something like this occur before we get the bigger push down to retest perhaps this bottom. Now that might not occur, it doesn't have to, but I think there's a good chance, especially if you consider that these support levels. So yes, we broke the trend line, but no, I think there's still some support levels present that will be able to turn price. And if it doesn't, if price does push through the 78 and 88.6 fib, well then, things are looking more bearishly impulsive than I expected, obviously. So then in that case, price will probably go down to challenge this bottom, and we'll have to see how price responds to that bottom. But if I look at the moving averages on the daily, I don't want to dive into a ton of details here, but look, this is all aligned. They're on top of each other. The long and short are just like, not loose at all. So when price tries to go away from moving averages that are intertwined like that, typically the moving averages act as a gravitational pull. So when price is trying to move away from it, they'll often snap back to it. They might succeed for a while, but there's a good chance the price will snap back to it. So considering the fibs still, I still think that the bounce up is more likely than the continuation down, despite the trend line break. All right, I hope I'm not over confusing things here, but if you have any questions, let me know. So how far can the bounce go? Well, as I said, there's a pretty good chance that it will go at least something like halfway. If I put a fib from here to here, move up back to 110 seems at minimum. As Roger also says, 109.80. But it could go a bit higher. It could go to the 38.2 fib, 110.50, or the 50, 111 even. Depends how aggressive you want to move or target. Now, it might even go further. Who knows? This could be just an impulsive correction. I've seen this more often. And then price continues to retest all the way here. Continues with this rough channel to the upside. And then turns back down. The target, I think, will have to be seen. Could be even higher than we expect, but difficult to imagine now considering this downside, but that could happen. Don't forget that this little push to the trend line, it could be a breakout, but it could be an underthrow. Trend channels have underthrows and overthrows where price kind of exceeds the trend line channel a bit, and after that price just goes back in the channel, and it's really didn't mean much except it just kind of accelerated through it a bit, but not changing the dynamics too much. This is still to be determined if this is a breakout or really an underthrow. If it is an underthrow, we would probably start changing the channel like this. Too soon to do that, but if we get a bounce, we'd do something like that. And that would be a new channel, and this would be a bouncing spot, then price could do that. So let's see. All right, obviously for those that, because it is the start of the month, let me take a look at some larger time frames as well. Last month did have a big wick. That was the month of February. And basically that monthly candle, if I can get rid of this fib finally. All right, there we go. This monthly candle has a big wick indeed and showing some exhaustion there. So that could be a signal that if price breaks through that low, what is the low? Something like 108.20 probably, 108.14. So if it breaks through 108.14, then that increases the chance of retesting this bottom as well, right? That is a signal that I talked about a few months ago as well. We're going to see a consolidation because of my time factor rule. Eventually, somewhere around this time, we're going to see a big wick, and that will probably be a good signal of exhaustion. So from that point of view, any upside could just retest the wick and then find downside again. And maybe we shouldn't, from that point of view, be counting on a break of last month's high. So that seems logical, not to aim too high if one takes a lot. And it's going to be interesting to see. Let's see, we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. All right, so this month could be bearish, and then the next month in April we could get the break of these lows, and we would be in a breakout to the downside. We have momentum here, as I've been, of course, showing already a long time. This is correction. Now the question is, when is the correction over? And that's something that remains to be seen. But it could be this month, could be next month that the push to the downside happens. This month could still be maybe a small doji, for instance, but the next month maybe, or the month after, I would expect the downtrend to continue. That is the monthly. And the weekly is looking like this. And you can see price kind of staying around this 21 EMA, not being able to break away from it. So it's going to be interesting to see how price responds to the 21 EMA band here on the weekly and this bottom. That could, as I said, cause the bounce to occur, a bit of a bounce. And if there is a good close below this 21 EMA band like that, then that could be a breakout as well. So it's going to be interesting this week to see how that responds to the 21 EMA. Those are long-term charts. Yesterday, I don't know if you saw it, but yesterday I posted a poll on Twitter asking what people thought, will the euro dollar bottom break this 104.60 in the next 3 months? So far, 62-ish% said yes. I think about 35% said no. So most people think yes at the moment. I do think yes, in the next 3 months, this bottom is going to break. But it doesn't mean that now there couldn't be a bit of a bounce before falling. So back to the 4-hour chart. And yeah, if stops, I think, well, there's two. One is risky, set below this bottom, which is not a bottom as yet, but below 108, 108.40-ish. That's one. Or 107.70. Or 106.90. With 106.90, it's a big stop loss, 180 pips, which means that the target would have to be at least 111, if not 112.50. The 107.70 would have to 109.80 could be enough. It's already a one-to-one trade, but I think 111 is still better. With a very tight stop loss, it would probably be better to aim at 109.80. Now, how do we know that this is finished? One way we can use it is my candle rule, basically. So far, we've had 4 candles not breaking this bottom. We need this one and the next at the minimum, and perhaps preferably one more. 6 candles not breaking this bottom. And then there's a higher chance that price is going to make a bounce. Something like this, for instance, 1, 2, 3, 4, 5, 6 candle right here, not breaking this bottom. So we did get a bit of a bounce, but then still the downtrend continuing after that. A bit earlier than I would expect, but okay. But that's anyhow, sometimes you can use that to benefit the time factor. So this was a clear, still push down, keeping lower lows every 5 to 6 candles. All right, doesn't look that way, it looks choppy. But if you look at it, every 5 to 6 candles, it still kept pushing. All of this piece, in fact. So that's one swing high, swing low, from that point of view, all the way down to here, actually. This is the next. And then this is another one. But we don't know if it's finished. A couple of candles from now, tomorrow, for instance, can look back and say, okay, 5 to 6 candles not breaking this bottom, then that probably is it, and there could be a rally. Or perhaps this does continue in the next couple of candles. In that case, it might fall down to the 880.6 fib. which could be a bouncing spot again. So keeping an eye on these candles and seeing if we get a break of this bottom or not in the next 2.5 candles, 4-hour candles. The next 2.5, 4-hour candles could be one way. And if it does break down to the 880.6 fib, then maybe even looking at the hourly chart and seeing, do we get 5 to 6 candles not breaking the bottom on the hourly chart? Or 4-hour, both are equally okay. All right, pound USD, big weekly down candle, and monthly too. So at this moment, very bearish. We have a bottom here around 134-ish, I think it is. 135. So we had a strong momentum to the downside, pullback, and the price basically turning back down on this month. If you look at the moving averages, we had a couple of candles below the moving averages, below the 21 EMA. We got a gap between the long term and short term. The 8 EMA turned slightly bullish for just a second, and then we got back down again. So basically, this is a classical break, pullback, continue. And this month was the continue candle. And the price has been falling ever since. Lower lows, lower highs. With the exception of this one. So nothing to suspect as yet, I think, from this perspective, that it might not happen again this month and the next month. This candle high is important, which is equal to this weekly resistance, fractal. And in the meantime, we got a lot of weekly candles below this 21 EMA. We got a big gap between the long term and short term. So if price ever gets back to the 21 EMA and turns, there's a good chance of continuation. But, in the meantime, it might just continue because we're on a weekly, will it even get back to the weekly 21 EMA? If eventually it will, but it doesn't have to be this week or even in the next few weeks. All right, last week was a strong candle, so probably not actually. All right, from that perspective, let's take a look at the daily now. All right. Daily chart, we can see that strong downside here. No. All right. We see the strong downside here, and we get a bit of a pullback and a continuation right here, and price has been falling ever since. Do we have divergence? It's not clear as yet. Let me just restart it here. It's not clear if we have divergence because the bearish momentum is still taking place. It's still continuing as we speak. So it's not 100% sure if there is divergence. Depends how much this pound USD will actually continue lower. Let me show you. All right, here we are. So basically you can see, okay, we got an oscillator that's not as far as the previous bottom, but it's still unfolding. It's still red. As soon as we have 3 green bars, then we can say there's divergence between these bottoms. If, of course, the oscillator is not as low, it's not lower than the previous bump. I'm talking about right here. So this is potential divergence, but we don't know yet because we need a clear bottom here, and we don't have it. It's still falling. So who knows? We can't say that it does. So everything is still in a breakout mode to the downside on this daily chart. How about the 4-hour chart? All right, here we see price. Yesterday I was already saying that price could make a retracement back to retest these tops. We don't have any divergence between the bottoms here. All right, so this is still pretty strong. Hourly chart, we only have a single divergence, which is really very mild with such a strong trend. So there's really no signs of any reversal potentials as yet. In fact, price has almost gotten back to the long-term moving average, which would remove the importance of this single divergence on the hourly chart in its entirety. And I would say it's close enough already. So that really is not too important. So from that point of view, it looks like, from my perspective, that we could probably see a turn back down. If we do get it, that could be another continuation of this downtrend. You can see a good downtrend here. Look at this gap, very strong. Every time price went back to the 21 EMA, continuation and continuation. And here it was so strong that it even didn't go back to the 21 EMA, right? So from that point of view, there could be one more continuation. There is that potential to do so and then fall again like that. All right. So now if price, for whatever reason, let's see, if price makes a bit of a correction like that and doesn't show much momentum to the downside, then there is a bit of a there is a probability that price could make a bigger correction on the 4-hour chart. All right, and it might, because if this is a wave 4, like I think, then it could be something like this, and price might make just a tad bigger correction before it then falls again. All right, so there is a bit of a risk, or there is a bit of a caution at the blue circle there. But it remains to be seen, because price could easily continue like this, make one more lower low, then get divergence on the 4-hour chart. Do you see that? Look at that. Let me show you a bit better. If price makes a lower line like this will probably go like that, hit the zero line, go back down, and then start climbing again. And then price will have divergence, will have a lower low, but divergence, the oscillator will not. And when there is a divergence, then price can go back to the long-term moving average, which is all the way up here, and then probably move one more time down. Why one more time down? For that answer, let's go to the daily chart. You'll see why. Because on the daily chart, what will happen is that, or weekly chart perhaps even, let's see, weekly chart, you can see that we're close to getting divergence, by the way, right? Because this oscillator was strong. This one is not as strong as yet. But just in time, this basically turned back down. So we're not sure how far this can go. We can look at the daily now. Daily chart, difficult to say about divergence yet. We don't know. It's not completed. All right. In any case, from this 4-hour perspective, we don't have divergence. So if it does create divergence, basically, then it has the chance of going up to this long-term moving average, all right, which would be about here at 142.50. So basically something like that. One more dip down, and then a pullback back to the daily 21 EMA is most likely, and then probably still one more continuation. So down, up, down. And in that case, you can see that the monthly candle would get about halfway retested. See that? We would probably break this low, then go up to retest the last month's candle, and then fall again. Yeah, this short indeed. We're going to be retesting that January's high would have been really perfect spot indeed for anyone. And sometimes it's easy to forget the monthly candle. To be honest, I forgot the monthly candle myself in the third week of February or so. It's easy to forget it because the month it's still highly imprinted in the mind, most likely, if you look at it at least but after 15 trading days, you kind of forget about the monthly high. But that would have been a warning that the triangle I saw on the lower time frames would probably not break to the upside and probably break to the downside. But that's something that I also didn't think about, when after 3 weeks. But it's always good to remember to keep an eye on that monthly, even later in the month. Anyhow, getting too much into details, I'm scared. So, any questions on this pound USD, perhaps? I know that a lot of concepts may be used, but basically, when there's divergence, the long-term moving average is the target. Just got to be careful not to use that too often, or not to use that at all, actually. You have to wait for double divergence on lower time frames, like 5, 15, because a single is not that worth that much. On the hourly chart, a single divergence is a question mark. Could be useful sometimes, many times. It's just also just still a continuation possible. So I am interested in seeing, how if price can show a good candle like this and turn the 8 EMA down. I'm interested in trying to see if I can take a trade to the downside. But from a times perspective, it might have to happen quick, because if it doesn't, otherwise there could be a bit of a bigger bear flag before we get to downside. So definitely interested in downside, just keeping an eye on how strong this correction and how far this correction can go. And if not, then I am interested in downside. After that, I would like a deeper pullback before I'm interested again. All right, dollar yen. In my wave analysis this morning, I already mentioned that this is probably an ABC, and that this probably will be the end of a correction. We'll get one more correction like that, and that does seem to be happening. If we put fibs from here to here, we had a 61.8 bounce. And if we put it from here to here, all right, we just missed the target at 112 after hitting the 38.2 fib there. All right, so we're getting a bounce. All in all, it seems like last week, of course, or 2 weeks ago, we were talking about this short. Price did move down, but didn't break this bottom, so we got double bottom, got a bounce off that, then again a rejection. So we're kind of getting a triangle. This could be an A, B, C. This could be a D. If it is, then E should not go above C. All right, so this could be one resistance spot, but it doesn't have to be. It could break that spot and then go up to retest these highs or these tops. So anyhow, a lot of resistance still ahead of it. That's the point, basically. So still more bearish, still looking for a continuation of this momentum. As long as price stays below these resistances and below the moving averages, long term, I think this is a heavy resistance zone that could see price push it further down. So yeah, I'm interested to see how far price can get up, but as soon as it shows some hesitation like it did here, 5 to 6 candles, I think it could be interesting to look for downside. Now, what if it doesn't break this top? If it doesn't break that top, then I'd rather look for a 21 EMA, break below the 21 EMA again. All right, so I'd rather look for a break of this. I'd rather look for a move up to these levels than see 5 to 6 candles weakness. And if it doesn't break this top, then I'd probably rather just wait for the 21 EMA break again. No, I'm not in the long. I did mark it as an ABC, but I didn't trade it myself. Let's see. Daily chart. Double bottom. Nothing really else to add on. Maybe the higher time frames, right? Price could go down to the 38.2 fib. And so there's still some space to the downside. Monthly chart was a big candle too. So that typically a candle like that, we should get a break of the low this month and not a break of last month's high. That would be typical. So it seems pretty likely that it doesn't have to be this month, but either this one next or the month after, we get a break of this low, and we should see price retest these tops probably in here, right? Or in a weekly chart, we can see price move down to the 38.2 fib. So a bit of retracement and then down still seems the most likely path of price. From a master candle perspective on the weekly, that weekly high is this weekly candle still the master, right? So that weekly high is important. So you got a lot of resistance above it here. Any of these levels could be turning spots. All right, but it doesn't have to get that high. We still have a clear downtrend in play. We got the long-term moving average here. We got the short-term here. Pretty good gap between them. So it doesn't have to get that high. It could just go up here, hit this long-term, and then turn already. 115 is resistance as well. All right, so that's my ideas on the dollar yen. Let's see. Looks like the 144 giving weekly support. Let's see. Yeah, that's possible. But the 144, I think, is always something where price can easily kind of dip below or above and then still see price then, move basically through it a bit and then find its support a bit later on, if you see what I mean. So it's a rough zone, but if there's a fib that's lower, it can easily accelerate through it a bit. Let's see here, for instance, right? Price goes through it a bit and still finds resistance. Here too. Here are precise hits, but you do get sometimes pushes through it like here and here a bit. So it's not untypical to see price kind of just go tad through it and still be respected. Important is whether basically the moving averages switch. Right? Will the moving averages switch? Here they don't. The short term stays above the long term. And also, will the fractal stay? Will the opposite? Well, this is getting into very big detail, but I think for Beverly, it definitely makes sense. For others, maybe not yet. But here we get not only the moving averages switch, but the fractal is on the opposite side of the 144. I'm not talking about these fractals. Here there's a fractal on the opposite side too. I'm not talking about this one. We're not talking about the support fractals. I'm talking about the resistance fractals here. They switched. You see that? So now this might be too much of a detail for others, but that's okay. But let's see. This is not a good example. Let me see on the 4-hour chart. Here, we had a switch. Not only the moving averages switched, but the resistance fractals, because here the moving averages were up, right? So they look like a bullish environment, right? But not only did price go through the tunnel here, moving averages switch, and then the resistance fractals are on the opposite side all of a sudden. Right here, not only are the support fractals above, but also the resistance, right? Obviously, both fractals. Here, all of a sudden, both of them on the other side. So that's when you get more kind of clue about that. Now, it's not always true. Look at this example here. Here we had support fractals on the opposite side. Well, it didn't do too much, right? Because price still went down. So sometimes, yes, you get a bit of a uneasy kind of whipsaw up and down when price is reversing and retracing a bit stronger than we expect. That always can happen, but typically it's a pretty good rule to look at. Like here, for instance, here you got fractals on the opposite side, resistance fractals continuing to stay below the price. We never had support fractals above. You see, we had a downtrend here. Let's take a look at this. You had a downtrend here, support fractals and resistance fractals above the long term. Then here we had them below. So we can see, okay, there's an environment change. We still had a pretty strong retest, but we never got support fractals on the opposite side. So we did get a push through the tunnel, yes, but we never had the support fractal on the upside, above it. And then we got fractals again back down. So then we can say, okay, we had a reversal, we had a strong retracement, but it's still back down. So back to the weekly, we can say, okay, price is probably still, ultimately it's still in the uptrend indeed, because we got fractals that are above, right? We got short above the long term. Yes, that makes a lot of sense, but it doesn't mean that the retracement is finished. The retracement, as we can see, can dip a bit below this, then bounce. We can get a fractal here, and then we'll have to see how price will respond to the short term moving averages. And will it be able to break above it and make an upside, or will price reject again, and will we slowly but surely go into a bigger consolidation or even a reversal? Great. I'm very happy that you think it's useful, Beverly. That's great stuff. Anything that helps is always good to hear. So that's basically the dollar yen at this moment. It's uptrend. It is close to a bouncing spot, but it doesn't have to be now. It could be a bit lower, and then we'll probably get the bounce. We'll get a fractal here, and then we'll have a battle between the short and the long-term moving averages. We'll have to see which one wins, down or up. So as long as price stays below these golden lines here, it's still in the bearish territory for that little bit of push down. All right, pound yen. Here I actually had a fractal above, and you can see sometimes price does kind of test. What this fractal is actually in the tunnel, to be honest. But okay, so that was close, but not yet totally above it. Ultimately, then we got fractal here, right below the tunnel, and we had a big downtrend ever since. And we do have a bit of divergence now between these bottoms. All right, so from that point of view, got to be a bit careful with the downside, and you can see prices already moving up. So divergence, what is the target? Long-term moving average, right? And we're already at a very high level, 1, 2, 3, 4, 5, 6, 7th fib level. So we know that there's a good chance price can get back to the long term. All right, so let me renew this chart here a bit. So we have divergence. It is a bullish divergence. Yeah, indeed. And we have a lower low on price, but a lower high on the escalator. So basically, price might make that correction. So if we put a fib on this swing high, swing low, there could be an ABC zigzag up to retest these levels here. Long-term moving average, the tops here, and the bottom here. All right, so bear with me. Sorry, Roger. Roger mentioned pound Swissy. So that might not be a very interesting one, depending on how for me it's not as interesting, at least. It's pound yen. You can see also, let's take a look at the daily quickly. Fourth day. Well, in any case, we don't have divergence on this. No, we do. We might have divergence on the daily, but not sure yet. Weekly is still very bearish. Well, in fact, we don't on the daily because this is still not divergence. So on the daily, if it gets back to the 21 EMA band, this is still strong resistance. So that actually makes sense from a daily perspective. This is still a strong zone. So if it gets up here and turns, that's a pullback continuation. Now on a 4-hour, we do have divergence, which means the price can basically make that ABC zigzag because of the divergence up to that 21 EMA on the daily, which we know is resistance. The 21 daily, the 21 EMAs on the daily is equal to the long-term moving averages here. So as soon as it makes this ABC zigzag on the 4-hour, it will go back to resistance on the daily, which could turn it back down again. So from a trading perspective, what could be interesting? I'm not that keen on reversals, but a 4-hour candle here closing above it, or preferably a 4-hour candle like that, that is loose from this 21 EMA, that could be interesting. Then to zoom into the hourly, look for a bit of a pullback and continuation. So I'd like to see another bullish candle like this. Then zoom in. What we'll then see probably is price do something like that. It will make a couple of candles like that. It will still go through this 144 EMA. Then make some kind of correction. Let price go back to this 21 EMA and then bounce off that band like this. That could be interesting long. Not right now. It's too soon. Or too late. Could have been maybe here as a reversal trade. Or even here upon the break of this trend line. Right, but now it's not good because it's right. I mean, it's not worth it now. Now, dollar yen indeed has resistance close by. We don't know how far it will go up, so that makes it, that makes it very riskier indeed. That's true what Beverly's saying. But from a divergence point of view, that could happen. And from divergence point of view, sometimes it's even less risky to look at the fib. But that already has happened, right? 61.8 fib here is now easily put at break even. All right, so we had a weakness here and then a breakout, and basically you can see price not only going above the 21 EMA, but then going up to the 144, then seeing a correction kind of like a corrective pattern like that, and then again a break. So if there is a potential for a trade, I think we really need to see some good momentum, a bit of a bull flag, and then a bounce again. But it's risky, definitely. Euro yen is not ready for that. Doesn't have divergence as yet. This is still building. This is still a bearish momentum continuing. Odd USD got a bounce at this trend line. Moving averages are quite choppy and intertwined, but did get a bounce at the trend line. Mentioned that in the recap video yesterday, and now is going back to resistance, perhaps. It's staying in this triangle. Does not look that interesting to me. Kiwi in a consolidation too. Also not that interesting, I think. Channel sideways. All right, dollar CAD. You see sometimes divergence doesn't always give the trade that one expects. This is a double divergence at the moment. The single divergence did get price back to the long term. You see that, right? We get a divergence between these bottoms. Where did price go to the long term? Doesn't always happen, but in this case it does. And now we got another divergence again. So I would be cautious with dollar CAD downside. All right, pound odd. No divergence at all. So it looks good for downside, to be honest. I like this. I don't know why this template is causing me a bit of problems. Okay, no, still closed. I'll have to check. I don't know why. This didn't occur to me yesterday. Anyhow, the pound out looks good because the momentum is clearly bearish. We got a lot of candles below the 21 EMA, no divergence, a big gap between these moving averages. We have price making a bit of retracement to the 21 EMA band. And soon, not yet, but soon we might have the 8 EMA turning back down. Not the first, but the second time, which is even a stronger signal. Here was the first. And kind of a failure to close below the 21 EMA. You see that? So if this candle, I would like to see a candle close below this 21 EMA, somewhere around here. 8 EMA will be turned back down. That would be, I think, a good entry right there, or upon a small retracement, stop loss above the candle high or the fractal here, or top, I should say. And the target, I would put it from here to the moment, 38.2 hit. Target 190. Wow. We were just talking about psychological 200 level not so long ago. Now looking at 190. Now, if it doesn't close below here, but the 8 EMA turned, then it still could be okay. It's not as great as, of course, if it closes below it. Could still be okay. Let's take a look at the hourly. There are a couple of options in that case. One is a trendline break instead. Just waiting for the break of this trendline. With a pending order, perhaps even here. Stop loss above here. And let's see. The other option could be because price did get back to the long-term moving average. You can see we had divergence between these bottoms, right? Price going back to its target. So that divergence is out of the way. So break is one way, but the other way could be if price does get a bit of a bounce, to look for a short around here, bit of a head and shoulders pattern on the hourly. The stop loss above the head, entry at the right shoulder. That could be a third potential entry. The first one was the 4-hour chart. 4-hour candle close below the 21 EMA. The second is the breakout. The third is the head and shoulders potential. The fourth could be to say, okay, I'm interested in shorting here, but I'm going to wait for price to get up here and then show a price action reaction. Fourth approach, or even zoom into the 15-minute chart. And look for 5 to 6 candles when price does move up like this. 5 to 6 candles not breaking this level, roughly. Doesn't have to be there exactly. We can put a fib from here to here and see, okay. Any of these fibs, in fact, could be it. But the 61.8 obviously lends itself nicely because of the pattern that could play out. So 5 to 6 candles not breaking this level. Let's say price does this. Makes a bit of a hook back, 5 to 6 candles not breaking it. That could be then another way of doing it, the fifth way. Then a stop loss might even be able to be used here. That's a risky one, but a tight one, and could be extremely good R2R. That could be another way. Now price might not get here, and price just could go make a triangle like this. And let's see, 4-hour candle. Price might end up here, right? It might make a triangle, a 15-minute chart, might close here on the 4-hour. just go sideways like that, when it does a triangle like that, then there is a good chance that the price will break out. And it will not, in that case, if there's a triangle, it might not even get up to the 61.8 fib. Now, those are what if, what if situation here. Always not never wrong to say what if. If price then obviously breaks, let's see, difficult to imagine at the moment, but yeah, it can always happen if this is a new channel, a new uptrend somehow out of the blue. There's no signs that that could happen, but if price breaks above this top, well, then obviously the whole thing is out of the window because then, for whatever reason, it might be retracing and making a bigger retrace. So then it's not as bearish. It's still bearish because look at this gap between the moving averages, but there's a retracement, a bigger retracement going on that was not that is not visible now. Seems unlikely now, but you never know. So really the moment that everything goes out of the window, this analysis goes out of the window is when if it breaks above 196. So far I think I like the pound odd the most. In fact, Beverly is still in that trade and might add to the position as she says. If we get anything like that. So great job. Let's see. Excellent. I mean, that's really a great job. Still in that trade, 190 all the way down to 192.50, and there's a chance it can get down to 190. That's a tremendous amount of pips. That's amazing. I think it's more than 1,000 or something like that. Because I remember you were targeting 200. If it's the same trade still, I don't know. Euro odd. Kind of like the euro odd, like the pound odd, but the pound odd looks just a bit better. Pound Swiss C. I promised Roger. Roger, I think, had to leave already in the meantime, but pity. But Pound Swiss C divergence between these bottoms. So there's a bit of a warning that the pound, pound yen, pound Swiss do have a bit of divergence. So that could cause the pounds to rally a bit here, or the Swiss C and the yen, of course, to let's see, to weaken. Bit disturbing perhaps, but still pound out looking good, I would say. But we have to be cautious. Maybe we get the pound, Swiss pound yen to go up first a bit. It doesn't have to be necessarily because of the pound. But there's divergence, so there's a chance of retracement here. So this breakout does not look good. Gotta be careful with the trend. Gotta be careful with trading it with the trend. All right, New Zealand CAD. You said that you managed to get out of the other trade, so I'm assuming that's the New Zealand CAD. Probably, I think we were talking about it around here and saying it doesn't look that good, right? It could there's not probably that many chances to get out, but you still got out at a small loss. Great, happy to hear that because there was still one more pullback before it really started to fall. I'm glad you managed to get out of that one then at that turning spot. Excellent. I'm very happy it was only a small loss because um, it didn't look that great. The setup after maybe at the time you took it, I'm not saying, but I mean like after all of this mess, right? And typically, if it takes too long, then many times if it's this consolidating, it almost so a law of Murphy, right? That it will take hit your stop loss. So I'm glad that you managed to cut the losses short, which is only a big profit actually. Great stuff. Yeah, it eventually gets annoying, and then once it gets annoying, it's difficult to take any decision, in fact, right? Because no matter what it does, it's going to annoy us almost even more. Um, all right, some indices, DAX going back to the long-term moving average. There's divergence between the bottoms. This bottom break was not that not much momentum. Oil, there is a double divergence, so price does seem to be heading back to that long-term moving average at around 40 for the moment. Gold hanging around here, doing nothing really between 1200 and 1240, but good momentum. So if it does nothing with the good momentum before it, then this could be a bit of a triangle and then still one more upside break. Good monthly candle last month. Broke out of this falling wedge, excuse me, clear break. So a bit of retracement of that monthly candle, and we just might continue again with that trend, that momentum, I should say, for one more push. Now that push might not go too far. We might just get a small squeeze, a small push, I should say, to the minus 272 target, 1320. Have to see how price will react to that. I don't know. I think it looks good for the moment for upside, but I would like to see it pull back a bit deeper though to the 50 and the 61.8. It is at long-term resistance, and I know there was divergence, but we already reached the target here on the weekly. Now, as we know, the tunnel in general is just an area, so it could easily go to the minus 272 target and then still turn. So I think that a bit deeper fib might give more space up to the minus 272 target, which then could be again resistance. So a zigzag seems likely, but there's not a lot of space to the upside, I would say. I mean, who knows? You never know. It could start accelerating more than I think and really start pushing through it. But then there's a trend change, and that, of course, changes things. In that case, once we get a pullback, if it reaches this target, once we get a pullback, then we could see a bigger uptrend. For the moment, we don't know if this is trend reversal or just retracement. So it's a bit early still, unless it pulls back maybe a bit more so we get a tad more space up to the first target, if that makes sense. Let's see. The indices, well, there was actually a shorter down move than I expected here, right? With all of them. So a bit disappointing, in fact. It's really bounced. I mean, when you see such a, not disappointing, I mean, wrong word. I mean, it's less than expected. Less, because there was good momentum here, I should say, sorry. Strong momentum, right? And we got a pullback, and I expect a continuation. And I would have thought that the minus 272 target is kind of the minimum we would aim for. But it didn't get there. It actually just bounced off the bottom again of these support levels. That's what I mean, that the momentum continuation here, or the lack of it, was disappointing in the sense that we didn't get, the follow through. That's what I meant. So we get another bounce here, and we're back at resistance. So we're getting a bit of a squeeze between long term, still acting as support, and this still probably going to act as resistance as we get higher here. So a bit caught in between that. And I would say that's still pretty much resistance up in here. Got bottoms here, fibs. And price might move down at least to test these bottoms yet again. If it does bounce, slowly but surely we're getting into a descending wedge. If it breaks above the 61.8, then and makes the bull flag, well then it's starting to look bullish, I would say. All right, so any others? Let's see. Pound New Zealand, like pound odd, no divergence. So if it manages to turn, I think that we got a retracement and continuation. We had a good downtrend here. Price making a retracement back to the 21 EMA. So as soon as we get a 4-hour candle that makes the 80 EMA turn back down, I think it's a good continuation potential, just like the pound odd. All right, we looked at many pairs. I guess there are a couple of crosses that we didn't look at. Pound CAD, no divergence either. Same story. Actually, very strong downtrend at the moment. Euro odd. Anyone who took a trade in here and is still holding on, like myself, you can use a stop loss above this high here to probably go to break even. This fractal is not yet closed, but it's very close to closing. That makes a lot of sense. It has been a kind of a slower move, as you can see. Price is going sideways, but now finally it seems to be breaking this trend line and this triangle. And anyone who had the patience to hold on despite this consolidation can probably use this top now. So interesting, this hourly candle not being able to break below this bottom. Let's see how this responds. If this is an engulfing twin, that could be maybe already a signal that this 4-hour candle will not break, which is the fourth, still on the early side, but maybe we get a respect for the 78.6 fib. Let's see. Pound USD, time will tell. I would be interested in shorting, but at the moment it's pushing up, so let's see. Doesn't look like it's going to give a signal in this candle, but time will tell. I'm interested in shorts, but I would like to see a clear turn first. And then a clear continuation too, otherwise there could be a bigger correction. Better than a pound USD seems to be the pound odd though. And maybe even the euro odd at the moment, but that one is already behind us. Others do show divergence. The dollar yen I'm interested in shorting if it reaches resistance. Pound yen shorting interesting if it reaches the long-term moving average, same like the euro yen. Oh, sorry, pound yen, euro yen is actually a bit different, but could be the same soon. A couple of candles from now, if a couple of candles from now do not break this bottom, and 5 to 6 candles go like this, then that could be actually a zigzag 2 up to resistance. Odd USD, Kiwi seem choppy, CAD has divergence. So pound New Zealand, pound odd, maybe pound dollar seem the most interesting. Those are all pound related, by the way, of course. So be careful of that. Dollar yen to euro dollar, maybe upside could be interesting. Later on, maybe tomorrow, probably better euro odd continuation down, and pound Swiss has divergence. Actually, New Zealand CAD now seems interesting for downside. If it gets up to resistance 21 EMA and then turns, could be interesting for downside. Odd CAD probably the same actually. Good momentum. So if it hooks back 2 to 20 EMA turns, that could be good. So same like the pound odd. Odd CAD, New Zealand CAD actually now look pretty good for bearishness. This does not look interesting at all. Divergence does not look interesting. Could be okay, but pound CAD looks a bit better than the Euro CAD. So yeah, odd CAD and Zin CAD, pound CAD do look good, I would say. CAD there still looking like it has some potential there. At least against the pound, odd, and CAD. So those are the couple of pairs that I think are interesting. One of the CADs maybe to the downside against pound, New Zealand or odd, and the pound versus the odd New Zealand. Sorry, the pound versus the odd or New Zealand. Sorry, those seem to be the two most interesting groups. And then we have the majors that might have some setups there too. From an intraday perspective, be careful that you got some news today. As I said, the euro and pound. We got manufacturing PMI, so that's something to be careful of. Euro employment rate, and we got some CAD as well, GDP. So when I say CAD, you want to be careful of that. And USD has the PMI, right? So those are definitely things you want to be careful of when considering those. Pound odd is maybe a bit less risky because after the pound news, we already had the Aussie news event, so that's a bit better. Any questions? If you do, let me know. In the meantime, let me show you the webinars of this week. Tomorrow, we're going to take a look at strategy. Then it's going to take a look at the balance need and greed in the evening. And Thursday evening, we're going to take a look at rules and guidelines for indicator systems. Yeah, today, US time, there are going to be primaries regarding the Democratic candidates and Republican candidates in a bunch of states, which is called Super Tuesday. I don't know how many states, I think. Well, there's a good amount of them in any case. Maybe 12. I'm just guessing. Does anyone know? A lot of states in that case. So I don't know necessarily if that has any impact on the markets. I think that the results will not be known, I would expect, at least to the end of the day in the US. And I would probably be way closed the markets, I would say. But yeah, if you're holding swing positions, that might be something to be careful of. Yeah, makes sense. I mean, you never know. It could always cause some volatility, maybe a lot of volatility. So definitely something to consider and think about. Maybe Darren wrote something in fundamental analysis. I'm not sure. Something we can check. You see, there are a lot of articles from yesterday. Brexit, what are the implications? So, that's something we can check maybe there too. I'm not sure if there's going to be anything about it, but maybe this front and center. I don't know. Not sure. But yeah, definitely something to consider and think about. So I think that, I mean, looking at the market, I think the most interesting to me seems the potential for your dollar to bounce at the 78 or 880.6 fib. I do think that could be interesting. Maybe even the downside later today, if it does break below 108.50 down to 107.80, right? So that could be interesting. The pound USD, I think, could be interesting if it hits resistance up in here and shows some weakness on the hourly chart, for instance. Right, as it gets up to 140.50, 140, maybe one more push, that could be interesting here. Or if it starts to push down. The Dollar yen too, I think those are, the majors do seem to lean itself for some trading today. Maybe let's see on the 50-minute chart here. If this momentum carries itself very high up to this resistance spot, right, or even further, and just keeps pushing like this, and then 5 to 6 candles do not break this high, especially if there's divergence between these tops, that could be interesting as well. But we have to be careful. If this is too strong, there could be also a triangle and one more break higher. So as soon as there is divergence, that could be an interesting signal for short. Let's say it pushes up very strongly, then shows triangle, breaks one more time, breaks this high, right? Then it has 5 to 6 candles not breaking this second high. That could be the most interesting reversal short there. Yep, I think that's really all I can think about at the moment. Maybe I forgot still something, but I'll mention it then tomorrow. I hope to see you in the webinar, and if you have any particular questions after going through this, let me know on these moving averages. I know that not everyone is a fan of moving averages, and I did talk about that a lot, so appreciate your patience there. Let's see, Beverly has still writing, going to have to watch, would be happy if you change color and back again on 4 hour. If you're not sure what that means, let's see. What do you mean with your 8? Oh, 8 EMA, sorry. Yeah, definitely. Oh, the dollar yen, okay. Yeah, if we zoom in, we had 8 EMA change here, right? And here. And here we didn't get it, right? So price actually stayed above that 21 EMA. That's one of the warnings that we might get perhaps a bigger retracement. No problems, perfectly. I fully understand now. So this one was not really with the trend setup, because price was clearly already above the 21 EMA. So now if it kind of struggles here and then turns, the 8 EMA then turns, that could be the breakout trade there. Or if it does push one more time successfully, then, as I said, I'm looking for a move up to resistance just a tad higher, somewhere in here, breaking this top then. So let's see if it fails like that, or if it does manage to get higher and then turn. All right, folks. Thank you so much, Beverly, for all your comments, and everyone else, and wish you great trading. Talk to you soon.